You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan Rose. Welcome to Masters in Trading Live. Masters in Trading Live. We get on here every single day the market's open, 11 o'clock Eastern. Share some tidbits about the market. I'm going to try to point to it correctly this time. Nice. I got to do the opposite. Share some tidbits about the market. Share some thoughts, some trades, etc. 4 topics. Before I start, I don't know about you, but the trade's starting to get good. You feel that a little bit? Market is starting to move. Trade is really starting to get good. 4 topics. QQQ, line in the sand. Our line in the sand, it's just a way to simplify things. Our line in the sand, when we say it's above bullish, below bearish. We just want one line, a pivot point. QQQ, I'm going to share that pivot point with you. Our divergence portfolio. I manage 4 portfolios at Masters in Trading. I manage our advanced notice portfolio, our divergence portfolio, our earnings portfolio, and then we also have a blockchain portfolio. We're going to go over some closed trades in our divergence portfolio, in Hecla mining, and finally, I got a bond chart to show you because it kind of feels like the price of bonds just might sell off. Rates might go a little bit higher, so I want to show you exactly what I'm looking at. Okay, let's go to the charts. Okay, guys, let's start right here. Make sure my pen's working. So in our Discord community, we have a Discord community where we have our traders talking, going back and forth, sharing ideas. In our Discord community yesterday, 11:47, I wanted everybody to look at a new line in the sand. The line in the sand is going to be the low of the last week's trading was 490. That's going to be right here. Last week, 490. The high of these 2 previous weeks are 487.5 and 488. So therefore, our line in the sand is going to be that band. Shared that yesterday. Today we walk in. Market gaps lower. Market gaps lower. The high today is 488. So that's 488 right there. What does this mean? This is our line in the sand. The Qs right now are trading, if I find you little buggers, 485, same level. So this is what you should watch for. You're going to have resistance, and if we get above there, you're going to have support. Big level, watch out. I assume the Qs should go and test that level one more time. If it gets up there and fails right away, it's bearish. The longer the Qs stay above 485, 488, 489, the longer it stays there, the more bullish things are. If we're going to go down, we should fail quickly, and short-term VIX should pop, should go higher. The longer we trade close to 488, the more bullish it becomes. Divergence trader. So how this works is we have our open positions. I can't share any information about our open positions because that might move the stock. So I can't do that. But what I can do is I can share our closed positions. So we have 3 of our trades now that we've been able to close in our divergence trader. 1, we have our USO calls expiring in July. We closed those. We bought for $1.23. We bought for $2.16. And then we were able to exit, locking in 100%, locking in 40% for a total 65%. We also had our LNG bull credit spread. Here was a credit spread. Our credit spread, we're able, it's a bullish credit spread. sold the 115s, and then bought the 145s. LNG, we closed this position for, a little bit of a 9% gain. But the other position that we closed just yesterday was an HL. And HL is a good example of one of our trades. And I'm going to go over this trade because HL, there was a time where this was stuck in the mud. There was a time where we thought this was going to be a big, fat loser. But the cool thing, when you're buying options, guys, you can never lose more than you bet, right? So 529, Chris is my editor. We shared, let's buy to open HL 6 strike calls for 41 cents or better. That's $41 of risk, $410 of risk if you wanted to do 10 of them. But look at the date, because 529 is going to take us right here. So the first trade was done right there. Now you might look at that and be like, you know what, JR? That's a shitty trade, bro. And you'd be right. It is a shitty trade because it went against us right away. But the reason we got into the trade was shared before we put any risk on. I shared the reasons for the trade, and then traders have the option. Do you want to risk $410 on buying a 10 lot? Some do, some don't. But when you get into the trade, you're committed until expiration. So the trade goes against us. What do? Well, the first trade was shared right here on 529, right? Put that on the chart, 529. Terrible entry, fine. But that doesn't mean we're going to put our head down and cry and then just cover and take a big fat loss. Heck no. We're going to manage money because you're not always going to buy the low. You're not always going to buy the high. But what you can do is learn how to manage money. You can only lose what you invest. So $410, maybe $500 here. So you have 2 separate trades waiting until expiration, waiting for that big turn. When it did turn, we shared, guys, divergence trade. We're going to get out because these expire this Friday. So our trades that we originally got in for 50 cents are now $1.20. The 6 that we got in for 41 cents is now 28 cents. We're going to take off that as well because we took some pain, we got through, and then this ends up being a lovely trade. Old dog, new tricks. He's been going by ODNG in Discord. ODNT in Discord, pardon me. Nice enough to share HL trade has really paid off. When it was worthless, it got to be worthless. Everyone thought this thing was absolutely dead. I lowered my cost basis. I was able to sell a quarter of it for about 35 cents. I don't know where that came from. Sold another batch for 400% and just managing money. Building a position, waiting for it to come around, putting yourself into a position to potentially get yourself a 10-bagger. 10-baggers are very cool. ODNT, thank you for sharing. The next topic that I want to touch on is bonds. Bonds are getting a little bit toppy here. When bonds sell off in price, that means rates are going higher. So what do we have here? I'm looking at 1-month cycles. Okay? This is going to be May. This one's going to be June. This one's going to be July. I'm also looking at volatility. This is volatility, implied volatility. This part is more volatile than this part. Okay? When it goes out, it's more volatile. When it narrows, it's less volatile. Well, the bonds like to trade right up to these levels like it did in May and sells off. In June, bonds traded right up to these levels and sold off. In July, bonds traded right up to these levels and were just hanging there. If I go back even to this March, you could see traded right up. In April, traded off and then just plowed through higher rates, weak market. So right now, I think bonds are a little bit toppy. I wouldn't be surprised if bonds sold off and rates traded a little bit higher. Now, in our all access portion, every day we go through a couple of bullet points, and then the all access portion gets access to all the programs, all 4 programs. In the all access portion of this video, I got a wing dinger of an earnings trade to share with you, and I'm going to share that in a second. Thanks for watching. We'll see you guys tomorrow, 11 o'clock Eastern time.